you're watching Proactive London, and joining us this morning from IronRidge Resources, we have Vincent Mascolo. Hello to you, Vincent. How are you today?
Yeah, good morning. Thanks, Katie. Lovely to be here. Thank you.
Lovely to have you with us. And we've got two meaty news releases to discuss here. So maybe we'll start with the news of the day. You've released your results of a scoping study here, Ewoyaa Lithium project in Ghana. Maybe walk us through it if you would then, Vincent.
Yeah, certainly, Katie. Thanks. Yes, today we announced exceptional scoping study results for our lithium project called Ewoyaa in Ghana. The scoping study demonstrates that we can produce a 2 million tonne per annum run of mine operation and robust post-tax NPV of around 345 million US dollars. In general terms, the scoping study confirms that Ewoyaa is a standout project and an industry-leading asset. And why is it an industry-leading asset, I guess, is the principal question. And the scoping study demonstrates what we've been waving the flag at in Ghana for at least the last couple of years is it's all about location, location, and location, complemented, I should say, with exceptional geology and metallurgy. So these will always be the key fundamentals of a great project. So you're adjacent to coast, you're adjacent the multiple high voltage power lines, you're adjacent the national highway that takes you to the deep sea port of Takoradi, and that deep sea port is only 110 kilometres. So fundamentally, the project we always knew deep down in our hearts was always going to deliver spectacular results. But until we get the consultants and the experts and the specialists in to prove it, it's taken us a couple of years. We've gone through the downturn in the lithium space of the last 2 years, and let me tell you, the last six months has been crazy in the lithium space, from where we thought we were going to go with this project to where we ended up over Christmas, and in the last couple of weeks having to pull all the consultants in and get them to work feverishly to deliver remodeled numbers on a much grander scale, because the lithium market is now seeing a significant resurgence. So, you know, what we have and what the scoping study demonstrates, and we'll talk about the numbers in a minute, is the Ewoyaa deposit is outcropping. So it means there's a low stripping ratio, it's conventional mining methods. We have exceptional metallurgy, so we don't have to go through flotation. It's simple dense media separation, which reduces your capex significantly up to over half. So that's another great aspect of the project. Compounded with excellent geology, which I've touched on. So all these, and proximity to operational infrastructure. So it's always going to be a first cost quartile. So we have low operating costs and low capital expenditure to get this project off the ground. And what we've also done is we've forecasted as part of our cash flow that the Ewoyaa Hill historical deposit, which led us to this grander discovery, will form part of the feed into the operation. But you know, these are the metrics that will always make a standout project. So yeah, we're onto something quite significant here, and it's finally good to put some robust numbers around them, and hopefully the market will appreciate what we've been doing quietly in the background. I think in the last 12 months, people have been asking what's going on with our lithium project. We've been predominantly focused on our gold assets, which we'll touch on. But we've always said that, look, we are doing low-cost items that will have a high impact and shorten timelines to development. And there you go, everyone, we've delivered that. But from an economics perspective, I mean, these numbers are fantastic. I mean, the key numbers for us really is, you know, gross revenues of $1.55 billion over life of mine. That's an exceptional number. 8-year life of mine operation, producing around just under 300,000 tonne of spodumene concentrate at 6%. And we have a post-tax NPV of around 345 million US. And we expect the capex, the capital cost, to be around 68 million. And important number there is the payback period. it's less than a year from commencement of mine. And our operating cost is also very, very competitive. It's one of the best in the marketplace. And that once again is by virtue of location and proximity to amazing world-class infrastructure. But what we also like as we go through the development curve now in our Ewoyaa Lithium project is the EBITDA, so your earnings before interest, tax and depreciation and amortization, because ultimately as we get closer to development, the value of the project should in theory become a multiple of that number. So we're very encouraged. And the other key aspect, I guess, without going on too long about it, is the exploration upside. I mean, this is, you know, this project sits in a roughly 100 square kilometre land package, and we have over 648 square kilometres of tenure surrounding the Ewoyaa project. And I think last week we also announced that we had commenced drilling to expand the resource. We want to see this get a lot bigger. This is the stepping stone to something significantly bigger. And as fate would have it, we started drilling from one of 7 of our other lithium targets, which we recently identified through the course of the last 12 months through auger drilling. And we effectively hit a hole in one. We like to say that. We actually intersected visible spodumene in our first hole, and we continue to drill. And I can't tell you about those other drill holes just yet because it's not out in the marketplace. So we'll defer that for another day. So yeah, I mean, this is a great project. Average returns of around 105 million per annum on an EBITDA basis. So yeah, it's an amazing project. Fundamentals are there, and we look forward to upscaling the model and continuing to define resources and advancing the project in quick step.
Excellent. So let's maybe switch locations, shall we now? We're going to discuss in more detail. Let's delve into the numbers here. So you've reported multiple high-grade drill intersections and the confirmation of new gold targets at the Zaranou project in Côte d'Ivoire in West Africa. Vincent, take us through this one.
Look, Zaranou is our flagship gold project in Côte d'Ivoire. We have 3 province-scale portfolios, but Zaranou is our most advanced by virtue of initially by artisanal workings that we identified. But subsequent to that, we've drilled. We're getting close now to nearly completing our 90,000 metre drill program. And it's over 47 kilometres of strike, and we just keep drilling and hitting gold. So we've got an early ounces strategy, and that is to basically in the first sort of, shall we say, from surface to 90 metres, which is effectively a free dig situation. So we're proving that up quite nicely. And that, when we eventually issue a maiden resource, I won't say when, but we'll see that maiden resource should, and we believe will, underpin the value of the project and greater than the current valuation of the company. But at Zaranou, our last RNS, we started to hit what we've always been looking for. Is that strategy was, let's see what's at the top. Let's see if we can make that work. It's quick, it's easy, it's simple. And now we're starting to drill deeper, and we're actually starting to identify and understand the geology at depth, and we're hitting good grade at depth. So, I mean, you know, we got 16 metres at nearly 7 grams per tonne of gold from 100 metres, and that's in the fresh zone. So that's significant, and we've identified 4 key zones already, and that's only around 12 kilometres of the 47 kilometre strike zone that we have. So there's huge exploration upside here, but what's interesting us is the intersections at depth, and Yakase has delivered that. We previously had a batch of historical data. I think it was around 20,000 metres of drilling, but it was all very shallow. So we interpreted that, and we changed the orientation of drilling, and we started to drill deep. And as fate would have it, 28 metres at 4 grams per tonne at Yakase from 124 metres in fresh is an absolute stunning result. And we're looking forward to those further deep hole results coming through between now and the end of the drilling program and beyond, January 2021.
Sounds good. You've covered a lot of ground there. Thank you very much indeed. That's Vincent Mascolo from IronRidge Resources here on Proactive today.
Thank you very much, Katie. It's been a pleasure. Thank you.